TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Friday morning, 9:06 a.m. We got 24 minutes to go until the start of trading. We had a little bit of volatility out there. We have higher yields, talking about almost 1.3%. We got commodities pulling back. You get the gold contract pulling back pretty sharply. We have the Dow accelerating higher. We got growth stocks pulling back to the negative. All of this having to do with the jobs number. We got it at 8:30 this morning. Why not? Let's jump into the headline number, and we'll pull it up. That number coming in, 943,000 jobs. We're almost at a million. That's kind of the marquee mark. Million, of course, that round number, but we're almost at a million. When you combine with where we were in June, we got a revised upward of 938,000. So you're talking about 1.8 million jobs added in the last 2 months. I mean, that's the kind of job ads that you need if you're going to make up maybe 8 to 10 million jobs that we got to make up in terms of prior to the pandemic, the levels that we're at. I've been talking about many times. We have some a form of a reckoning, you could say, with jobs and the time that we're there in terms of, we just got July number, we got August numbers, we get September numbers coming in the next 60 days. We have federal stimulus, federal fiscal stimulus plans that were passed. Those are going to retire as well. But this is a good indication, folks, that that's what you want to see for this economy. Now, as I mentioned in the update, you know, how many levels deep do you go? As in you say, okay, the jobs are going well, the economy's doing well, that's great for business, stocks go higher. Well, wait, pause that analysis because you missed one, which is jobs are going well, economy's going well, Fed tapers the stimulus, markets might not go higher. That's going to be the question when we look forward to the open. Right now, though, the market just kind of sitting, waiting. S&P's up about 2 points, right where you were coming into this number. You get the Dow pulling back from that number, about 50 points, though. Really no action, right? You talk about, that's the NASDAQ 100, 50 points. Again, no real huge move. We're just back to where we were at the beginning of yesterday's action. The Dow spikes about 100 points. Again, you're talking about 35,000 point index. We're up 100 points on that number. You got Boeing up a little bit today. We got some earnings out there as well. And you get the Russell catching a bid as well. Russell up about 0.9%. Russell, you put it on a daily. Been in this consolidation in the Russell going back basically since late January. You got up to about 2,200. The all-time high in the Russell in the futures, you're talking about 2,366. Jumping back to some of those headline numbers, the other interesting one out there, unemployment sinking to 5.4%. Market was looking for about 5.7. Average hourly earnings growth advanced 4%. Market was looking for about 3.9. Labor force participation rate coming in right at 61.7. That number. So strong numbers out there in a big way for the jobs front. Can't ask for much more in terms of what you're looking for, especially when you look for the fact that the acceleration is supposed to pick up, right? I mean, the reckoning, as I talk about it, is going to be August, September, October. When you start losing the ability for many of those workers to stay on the stimulus that had been passed, maybe that causes some of those workers to come back and fill some of those many job openings that are there. We will find out. But a strong number this morning to kick things off at 8:30. And yeah, a lot of analysis in there. And I'm sure this is just to break down the live feed in terms of where we're at. Just taking out some of the analysis here that we're seeing. Still down about 8 million jobs from where we would have been absent of the pandemic. So remember, we're making up jobs, right? 8.6 million jobs below pre-crisis trend. Now, important when you talk about trend, folks, we don't just need to make up all the jobs that we lost since March of 2020, because that just brings us back to where we were a year and a half ago. Right? We have a growing population. We're supposed to have a growing economy. That's supposed to be adding jobs. That should mean that trend should continue. About 8 million jobs, 8.6 million from that number. So we got to keep going. There is still a possible reckoning in terms of the months to come. The expectations are only going to get ramped up, folks. And they're going to get ramped up by the fact that we've now had two numbers. All right? You got June and July. June and July, just under a million jobs. Expectations are that should not start to wane in the coming months when we need to make up 8.6 million jobs. The expectations, even with a big number, they're only going to be pushed higher in my mind as I try and break things down, right? If we come in at a low number this month, Maybe the market shakes it off and says, you know what, we have to wait a little bit longer. As Fed Chairman Powell says, he says, you know what, we can't make this decision just yet. We're going to wait for the data for the next coming meetings, plural, as many focused on in his remarks. But now we don't have to wait. We have 1 million jobs the last 2 months. And the expectation is going to be we better keep adding them at that level if we're going to make up 8.6 million when we come roaring out of this. The Delta variant, folks, of course, what's going on with schools, it is a factor, folks. You know, I'm in Florida. I got a young kid who's about to start school in pre-K. I got a young kid at home who is not in school. Neither of them have the chance to get vaccinated. It is a factor, let me tell you, folks, in a big way. You're going to see it play out. Now, Florida, a little bit of an anomaly, unfortunately, with what's going on, but interesting to see how that might shake out as we proceed into the future. But nonetheless, market's just kind of sitting where we're at. We got about 18 minutes to go until the opening bell. All right, let's jump around to other stories we got going on. So we got United out there. They are going to be the first airline to require vaccinations. I believe it's October. Let's see. Employees must be vaccinated 5 weeks after the FDA fully approves a COVID vaccine or 5 weeks after September 20th. So a lot of companies out there waiting for that full approval of the vaccines. Right now they're under emergency approval, even though you're talking about billions of people have been vaccinated with them. So that is expected to come sometime next month. All indications. Doesn't mean it's going to happen, right? But I imagine United is making this decision contingent on the fact that that's probably going to happen. So they're giving their employees 5 weeks after September 20th. You're basically into late October, and they're saying that's it. If you're not vaccinated by late October, that's the deal. And folks, they are a private company, all right, that needs to think about whether it's shareholders, whether it's profit, or how about just thinking about the ability to function as an airline for our economy, to have airlines functioning, folks. With the way this Delta variant is spreading, you see Tyson mandating it as well. I mean, politics aside, and I don't know how politics becomes something like this, all right, you can't have airlines ceasing to function because the employees are being ravaged by a virus, just like in the meatpacking industries. Tyson is probably not willing to maybe just let it circulate among their workforce, causing a meat shortage, which is a food shortage, which is necessary to live. Airlines, not necessary to live like food, but necessary to live in an economy where you need to travel. So 67,000 U.S. employees, I imagine you're going to see all the other airlines fall in line right behind them. And, you're talking about late October, folks, 5 weeks after September 20th. It just became August. We're talking about August, September, late October, almost 3 full months right now that they're giving their employees from this time, at a time when you can basically walk into any Walgreens or CVS and get the vaccine same day that you'd like in this country. But United, the first one to do that. We jump over to United, UAL, and they are basically flat. All the airlines getting a little bit of a pop yesterday. United trades from 45.50 to 47. We're higher in the pre-market. I mean, you have some of these Dow stocks trading higher as well. Not really indicative of that move. But nonetheless, checking around to some of the other airlines. Delta Airlines catching a bit of a lift after accelerating higher yesterday as well. Domestically, Southwest back to 51.07 from 50.45 yesterday. We'll finish it up with JetBlue. JetBlue shares trading higher as well. And Boeing. This one's an interesting one. Boeing. We'll see if this is kind of the bid it's going to find. You put Boeing on a 3-year weekly, right? Off the lows. Might be making a trend channel line. Talk about Boeing. We touched that trend channel line back on the week of July 19th. Correlates to that area that we're talking about, the trend from October all the way back to the lows of March. We'll take a look at this later in the program as well. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps positive by 4 right now. The Dow running up 121 points. We got DraftKings up here. I got a minute chart on DraftKings. We spiked up almost $55 from $50.48 last night. We're trading just about $53. I got a 1-minute chart up here just to see the action on their earnings this morning. Conference call begins at about 8:30 a.m., just as we got that jobs number as well. Now, jumping over to some of these numbers, they are some strong numbers, folks, when you look at it in a big way in terms of beats. Now, pulling up, I'm going to jump around a bit, okay? But second quarter revenue, one of the biggest factors, revenues and profits, right? Not much more important stuff in terms of a company's numbers. Revenue, almost $300 million. The market was looking for $424 million, okay? They had 1.1 million unique paying users for the quarter. That's up almost 300%. The average revenue per monthly unique player was $80, up 20%. Now I'm going to jump around here, excuse me, because here we go. So 298 million. Market was looking for 247. Here's the big part. Looking ahead, okay, fiscal year they're talking about. The outlook is now upwards of almost 1.3 billion. They get a range of 1.21 to 1.29. The previous range was 1.05 to 1.15. Forecast was 1.18, so they come in well above that in a big way in terms of where they are right now. Let's see, narrowed its second quarter loss to 76 cents a share. Analysts were looking for a loss of 58 cents per share, I guess. And you get into some of the guidance. Lots of headlines over here in a big way, but they beat, folks. I was looking at this one this morning. They beat all over the board in terms of the numbers that we're talking about here. Average revenue per monthly unique player, $80 is a big number, folks. As somebody that's been in, whether it's daily fantasy, whether it's gambling, that's a lot of money for DraftKings to be getting for revenue. I mean, that's not how much people are wagering. Okay, that's the revenue they're incurring from the fees on top of their wagers. You know, if you make like a $50 wager, maybe they got a 10% VIG on that $50 wager. So for every $50 wager, maybe they're pulling in $5 of revenue. I'm ballparking everything there. But when you see $80, that's a lot of wagers for an average revenue per monthly unique player. Big numbers there, and you look at the beat on a quarterly basis. I mean, that's, you're talking about almost $300 million for a company that was looking to take in $242. Not sure what they're talking about on the conference call, though. Might been a little bit of taming of the expectations there, pairing some of the gains, but we'll see how we trade on the open for DraftKings with their numbers. All right, jumping around to what else we have going on. There we go. pulling up. Stocks making moves. Canopy, they're out with their numbers as well. Canopy growth. Cannabis, a little bit of volatility. Basically, just barely positive on their numbers. Now, Canopy, unexpected quarterly profit on rising marijuana demand and cost cuts. The gain comes even as revenue falls short of Wall Street forecasts. I'd be careful of that one, folks. This one, I've been looking at this stock over and over, folks. At some point, and this might be it. I mean, yesterday's action was quite a bar. You look at that bar. Maybe that's the bar that you get. A little bit of strength off the bottom. You see the volume we got there. There was some speculation that somehow in part of the infrastructure plan, newsflash, folks, cannabis is a part of the infrastructure plan. I kid, but possibly. I'd seen headlines out there that there would be possibly something in there to do with the legality, maybe, of cannabis, something in there. So you catch a bid yesterday. Maybe that is where this thing finds a bid, because, man, it has been quite a slow decline when you look where we're at. You come out of the elections last year, right? If you recall, you get a Democratic president. You get them controlling the House and the Senate. Expectations are that they'll pass marijuana legislation. You get Wall Street bets and Robinhood traders behind this thing. You run it up to 56.50, and we pull back all the way back, folks, to where we were prior to the elections. The market's just remarkable. No matter how much you think you're right, folks, never think that you know more than the market, because I would not have anticipated that this thing was going to run back all the way to where we were prior to the November elections, but nonetheless we are. And even on those numbers, this thing just continues to struggle. You saw yesterday's action. They come out with their numbers. They miss on revenue. They're trading at $19.25 this morning. All right, other companies out there jumping around. We talked about DraftKings. We talked about Canopy. Yeah, Novavax last night. So they came out with their numbers. They're down dramatically. Said it would delay seeking emergency authorization for its vaccine until the fourth quarter. They've had some trouble with their vaccine. I remember headlines coming out from this prior. There's your volatility, up to 266. Good luck to the person that was buying at that spike high, 266. You're down to 201 this morning, putting it on a little bit more context here. You see the run this thing really had on the news that it might come out with that vaccine that would be able to fend on, itself in terms of others, up to 331. Now this morning, we're going to open right at about 200. This chart, folks, that's the middle of this trading range. It's quite a trading range. You could call it from about 125 up to maybe 275, even taking that spike high out of things. But Novavax is going to open about, 12, 13, 14% lower this morning. Diddy. So Diddy. They are trading higher. Report the China-based ride-hailing company was considering giving up control of its data to help resolve a regulatory probe by the Chinese government. China wants all the data, folks. They want it all. If you're going public, good luck to you in China unless you give the government basically everything you got. So there's a volatility on that. All right, now the market liking that because, the speculation was out there that they might even get fined some crazy amount. I mean, there's just so many variables in these Chinese companies going on right now. Now, Uber has a stake in Diddy out there as well. I just be careful. I'm not really touching any of this. You wake up any morning, folks, there could be a headline from China that would either spike this thing up or down 15, 20%. I'm not even exaggerating. You got Diddy up about 50 cents today on that news. Zillow came out with their numbers. Earnings, 44 cents a share, 20 cents above estimates. Operators' revenue above estimates as well. They gave an upbeat growth forecast as it scales up its home flipping business. It said it expects sales this quarter to exceed $2 billion for the first time. And Zillow, the Z, there it is. There's your volatility, down to 104, up to 11. Zillow, man, they got so much news in here. I was looking at this earlier as well because this flipping business they have, I'll dig into this a little bit more after one of the breaks because that is a big deal in the numbers that they're pushing out. I mean, they got small margins in that flipping business in a big way. Virgin Galactic out with their numbers. Lost 39 cents a share, 6 cents more than expected. They did report much better than expected revenue. It will sell seats for $450,000 and up. Market likes that pricing deal. Now, folks, be careful of this one as well. Look at that. Yeah, so much for holding on to the gains. You spike to 35.45 and the market says not so fast, folks. You pull it back. Really remarkable when you think about how easy it is sometimes. Not easy, we call it predictable, right? How predictable that you run up until Branson goes up into space, and the moment he goes up into space, the stock pushes all-time highs almost, right? Back up to those February highs. What does the company do? They sell a bunch of shares knowing that they might be overvalued. They're going to need cash. You crash down to $31 yet again. They got a long way to go, folks. This industry even is going to be an industry that's only going to be worth like $4 or $6 billion in the next 5 years or something like that. And that's the whole industry, space tourism. The only way that I see these companies really plowing into profitability is Elon's model, selling that technology to the Department of Defense and our government for the tune of multi-billion-dollar contracts in a big way. But Virgin Galactic, not quite there in the same way that SpaceX and Elon is with rockets and so forth. Nonetheless, you're trading a bit higher, up 70 cents on their numbers. But man, you're just consolidating around this $30 right now after pulling back from almost $55. All right, folks, stay tuned. Should be an interesting open. We get to find out if supply meets demand. We got the market accelerating higher into that open. We got 3 minutes to go until the opening bell. We get the S&P's positive by 5. It's Jobs Friday. Stay tuned, folks. We'll be right back in 3 minutes.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and right where we're kind of sitting, coming into that opening bell. S&P is positive by 3. Tech stocks, NASDAQ 100, slightly in the red by about 50 points right now. Jumping around, you get the Dow catching a bid up about 100 points, just above 35,000. Checking in on Boeing. Boeing shares up about 0.8% at 232. Checking in on United as well. We were talking about up about 1.4%. DraftKings this morning up about 3.8%, pulling back a bit from the spike high we had. Still strong numbers for DraftKings out with their numbers. We took a look at Canopy Growth. Canopy up about 0.6% on their numbers as well. Jumping around to some of the other stocks with earnings. Beyond Meat, trading a little bit lower in pre-market action. Quarterly loss, 31 cents a share, 7 cents more than expected. Revenue did come in above street forecast, but gave a cautious outlook due to more conservative orders by customers due to COVID-related uncertainty. So that's not like retail customers, folks. That's probably talking about customers in terms of stores stocking up on goods, worried about the forecast themselves with how COVID will play into things. And there's Beyond Meat, though, catching a little bit of a bid, down to 111 on their numbers last night, spiking higher on the open. We're down to only about 0.7% now as this market finds a bid across the board. Let's check in on commodities. We got crude just under $70. Gold really taking a beating this morning, down $37 as we have yield spiking. You got silver down almost 89 cents at $24.42, and your 10-year down about 15 ticks right now. That is correlating to a yield we talked about 1.28%. Remarkable action when you think about we were at 1.12 just Wednesday. We're now sitting approaching 1.3%. Just that quick in a big way in terms of the pullback we've had in the price of the 10-year as yields spike in a big way. All right, continuing the run, talking about other stocks. We got Dropbox out with their numbers down. Nope, they're positive. Yeah. 40 cents a share, beat by 7 cents. Revenue above forecast as well. We're all living on the cloud, folks. That's what's happening in the future, just so you know. There's Dropbox. We're up about 4%. You take a look at this thing on a daily basis. It's a one-way ship, folks, to higher prices. Put it on a 3-year weekly. There's your COVID acceleration down to $14. This thing really accelerates with the market from November. We're basically double that price right now from about $17.50. We're trading about $32.78 for Dropbox on strong numbers from them. Putting it on the 15-minute. They trade higher last night. You're trading higher on the open as well for Dropbox. Okay, Carvana. Yeah, check Carvana. I mean, they are just a rocket ship in a big way. How about this one? Let's see how if it's held it, but it was up more than 10% pre-market. Unexpected profit, first time ever. Folks, you want to talk about when is a good time to get into a company? It's when it transitions from a losing company to a profitable company. And this may be the transition that Carvana's got going on. Revenue, top in forecast as well by a wide margin. Auto sales in general have enjoyed a boom in demand since the pandemic began last year. Now, there's the disclaimer. Because do you want to be the one buying Carvana as the used car market is accelerating in ways we've never seen before? Maybe. Just something to keep in mind. Now, you want to talk about some volatility. My goodness. You come into COVID at 105. You spiked to 22. It's been a one-way rocket ship. I mean, yeah, you went from 22 to a high in March of 323. Okay, now just sometimes these things get pretty magnificent in terms of the type of pullbacks possible, right? When you get a run, folks, from $22 to $322, we'll just say, because that's basically what it was, and you get it in 1 year. A healthy pullback's almost to 209 from 323. Well, this thing almost got there. You got to 219, and now we're trading at 366. You're up 8.6% on the open on Carvana. They just keep crushing, folks, in a big way. The only thing in their way is probably just the industry they're in if you get a little bit of a pullback, which we are going to get, folks. Okay, used cars are not going to dominate the inflationary stories for years to come. Eventually, those car makers will be able to push out new vehicles. New cars will probably pull back, and there'll be a supply glut of new vehicles. Used cars won't be as attractive anymore. Those values will probably plummet. We all know how it could play out. I'm not sure how that would affect the likes of Carvana, but it ain't affecting it just yet. And when you start talking about making money, a profitable company, that's a whole new game from a company that's coming to the market for cash. Jumping back to DraftKings, taking a look, we're up 5.6% on their numbers, continuing the run. How about Yelp out with their numbers? Earned 5 cents a share. Market was looking for a 9-cent loss. They reported better than expected revenue, boosted its full-year forecast, and revenue shares. That's right, folks. 13%. Let's see if it held it on the open. Yelp shares. They sure did. They're up almost 14% now. Taking a look at this thing all the way back for the last year and a half, you're down to $12 during COVID. Now, what's interesting here is you just kind of made it back to where you were prior to COVID, right? You were sitting at 35. You came into this earnings event almost right at that 35 number. A little bit of a dichotomy going on for Yelp in terms of, yes, they are an online presence, But man, they're an online presence for people looking to do things in real life, talking about restaurants, right? Talking about whether it's just social functions. You can go to Yelp, etc. But Yelp up about 13% on their numbers this morning. All right, jumping around to what else we got going on in terms of numbers. So Norwegian out with their numbers, post mixed results ahead of its first U.S. voyage since last year. Now, what was interesting was I pulled up Norwegian yesterday. Not much volatility priced into these numbers, okay? Now, Norwegian down 1.4%. We'll put it on a 15-minute. Yeah, they come out with their numbers, and the headline there, getting into it, mixed second quarter results as future bookings remain strong ahead of its first cruise in the U.S. since last year. And that's interesting. The reason why the volatility was probably not priced in too dramatically on their numbers is because the market is not caring about what the numbers are for Norwegian in the last 90 days, folks. You know, it's all about how these things play out. They're about to have their first cruise in the U.S. since last year. That is going to determine this stock, which is why no matter what they came out with this morning, not really driving the action. You look at this equity. I mean, man, you talk about the run we had, and this might be it, folks. You know, you got a nice 618 retracement back in July. You came back and tested that area back in August. This is also correlating to the area you back in February, okay? The only thing I'll say as a disclaimer, folks, I do not own any of these cruise ships just yet. I don't own any airlines either. Long term, could be some great buys here. It really could. You know, you take a look at the 3-year weekly, and I know I'm using the if, right? Very easy to say it could be a long-term buy when you got Norwegian trading at $23. You were up at $60 before you came into COVID. But eventually, life will resume to normalcy, folks. Cruises will be a part of life again. That we won't have to fear that the cruise ship's going to get overrun with this virus. But nonetheless, they're pulling back today 1.4%. If you're going to be in this trade, there's two ways to do it, folks. You're either in it in the long term, where you're able to withstand the possible volatility you might get over the next 3 or 6 months, because we're not out of this thing just yet, in my opinion, or you do it super short term and you're trading this thing for swings on a 1 to 2 to 3 day basis, because as we've seen, I would not have expected, folks, many of us wouldn't have, right, that once we got this acceleration from November, you make a high at 34.49. We were back up to that level in early June. Not many people thought, probably, when you were pushing those levels at $34, when you combine the fact that you were up at almost $60 prior to COVID, okay, that did you expect that you might give back almost a 30% haircut in the span of 2 months on these cruise ships? But as we know, a lot of uncertainty in that market. All right, jumping back to the jobs number as we come into this break, one number that stood out to me, and this is in the report here. So this is talking about average hourly earnings of production and non-supervisory employees, leisure and hospitality. Okay, leisure and hospitality wages, average hourly earnings. That's the key here. You're talking about change from a year ago. All right, everybody's talking about you can't find workers, you can't hire them, right? Businesses having trouble hiring them. Well, what they decide to do, folks, businesses, they decide to pay more money and they're hiring. Look at that jump, 12.5%. You're telling me no inflation, folks? You got leisure and hospitality, double-digit average hourly earnings. Stay tuned, folks. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Right now, we're looking at a market sitting at all-time highs, folks. The S&P's positive by 10 points. We just made a high of 44.33. We're sitting at 44.31. All the markets catching a bid. Look at the NASDAQ 100. You're talking about basically 50 points away from all-time highs we made yesterday. The Dow, we just made an all-time high as well, 35,137 on the futures. We got the Russell up about 20 points as well. Bitcoin back above 40,000. You take a look at Bitcoin. Now, what's interesting here is, right, Fibonacci trends work both ways, folks. You look at this acceleration we had from really the highs, where we fell out of bed at about 60,000. Now, you could do this from the 65,000 high, okay? But I'm looking at a trend that's basically a one-way trip from 60,000 down to the lows we had at 30,000. You're looking for a dead cat bounce? The 382 is right at 40,000, folks. That's a critical level. Bitcoin struggling to get above that on many occasions. You look back to early June. You look back to where we were in late July. We're back up to that level again in August. Keep your eye on it, because if we don't find a bid above this level, I mean, you talk about an ABC on the way down, folks, that's going to take you to like 10,000. It's a $30,000. It's a dollar point index. 30,000. You go from 60,000 to 30,000 in a one-way shot. And folks, you did it in 2 months. This is not some crazy trend, all right? You think that you can go from 60 to 30 in 2 months, you catch a bid to 40. There's nothing to say that a Bitcoin can't be valued at $10,000 to $12,000, folks. Nothing at all. All right, that does not mean crypto's going away. If Bitcoin is valued at $12,000, it's possible. It was interesting, though, when I saw that bounce correlating to the 382 exactly on that chart. We jump back to some of the commodities. Gold kind of just sitting right at that 1770. Now, what's interesting here is that's a critical level for gold as well. We're right back to where we were for the part of June, the second half, also correlating to a 618 retracement. You look from March, you drive from about 1675, you make it up to about 1925, you pull back a 618, we're right back to that level again. Gold sitting down $38. Tough Friday for those gold bugs, down 2.1% today. Silver's down 90 cents as well at 24.39. And notes and bonds driving a lot of that commodity action. You got the 10-year down about 15 ticks, and as I mentioned, you got the yield at about 1.28%. All right, let's check in on some of the companies that we talked about, see how they're reacting this morning on their numbers. You got DraftKings up about 5%. They're trading at about $53. Strong numbers for them. Take a look at Penn in the same deal. So Penn, interesting, they came out with an acquisition themselves this week. They're up 0.7%. Looks like they had a little bit of volatility probably on the DraftKings numbers, but they really got ahead of that yesterday with the acceleration. As I talked about, folks, talk about chasing winners. Be careful out there. This thing runs from $3 to $142. I mean, one of the best trades out there when you talk about, what's that, a 40 bagger from the COVID lows, when it looked like sports were going to cease to exist. Can't bet on sports if sports aren't being played. But nonetheless, up to 142. Not many people saw this thing pulling back to $60. Now, that's Penn National. That's Barstool Sports. About half the size of the company when you look at their market capitalization. Penn National, you're talking about an $11.3 billion company, and they got a lot more going on than Barstool Sports in that company for sure. But then you take a look at DraftKings, and you're pushing $20+ billion for that company at 21.2. So DraftKings about double the size of the company of Penn National, but both of them a little bit higher this morning. Let's check out the cannabis stocks. Canopy, yeah, look at that. It is really tough in this one, folks. Canopy down again, down about 4% on their numbers last night, back to 1840. You're basically back to the lows we had earlier today. And this one's dicey, man. You put this thing on a 3-year weekly. Let's just eliminate that Fibonacci trend to see where we're at. I mean, our man Basil Chapman, he's coming up next, folks, for the Tiger Technicians Hour. He loves to talk about those symmetrical patterns, right? You got a cup and handle formation. There's your handle. There's your cup. Very possible this thing gets right back down to about $15. You're talking about $14.10 is really where this run began. $14.10 up to above $55. We're now trading at $18.45. Seems logical that might make it. And man, if we ever make it back down to $9, folks, watch out on Canopy with their numbers. But tough going. And that is a stock that cannot find a bid right now. I believe in the industry. I believe in the long term in that. I do. But man, just not happening just yet. Investors not willing to put their money in play just yet. All right, we got the S&Ps up about 6 points, putting it back on a daily. I mean, look at this run, folks, all right? Something to keep in mind here as we face volatility in this market is that we are smack in the middle of an uptrend channel, folks, all right? Even to the downside, you're talking about a good 70, 80-plus points you could trade down on the S&P, and we're still right in the middle of that uptrend channel. You make it to the top portion of that, you're talking about 45, 4,600 easy on the S&P. And you see how many times just since November, folks, okay, just in the last about 9 months that we have ping-ponged from the top end to the bottom end of that boundary line. S&P sitting at 44.28 right now. All right, jumping around to what else we got going on in terms of stories down here. We talked about a little wage growth, checking back in on the yield. So we got the yield shooting higher after the unemployment rate falls to 5.4%, as we talked about there. Okay, now you jump into where we are in terms of the 3-month, the 1-year, the 2-year. You're talking about right now the 10-year sitting at 1.28. Okay, you got the 30-year approaching 2%. But man, you get into these numbers with the 2-year at 1.21. Excuse me. You talk about the real yields. You add in inflation there. The real yield, when compared to the 10-year, you buy a 10-year treasury, you factor in inflation, you're basically losing just more than 1% a year on those 10 years. Not sure how that plays out in the future, but watch out on that one, folks. Yields rising, but not quite up to where they were in terms of inflationary data. All right, and let's jump around to some of the FANG stocks as we have the NASDAQ 100. Let me put this back on a 3-year weekly. Yeah, that trend not is really important. I was playing with some trend lines, trying to figure out. NASDAQ's its own animal up here, sitting at about 15,120. We put it on a 5-minute. You see the volatility. We spike higher in the open, but man, we almost give it all back on the NASDAQ. Let's check in on some of the FANG stocks. We got Amazon shares down about 0.4% right now. Apple, the big dog, down about 0.5% right now. Microsoft shares down about 0.4% right now. Google shares flat, 27.39. Social media, Facebook up about 0.4%. Man, Facebook, it just don't stop for this stock, right? 364. We're going to be pushing near all-time highs yet again of 377.55. This thing has just been a rocket ship in a big way. And let's jump around to some of the, you could call them work-from-home stocks. Quite the acceleration for some of these equities this week, as lockdowns and restrictions become a factor yet again that we have to price into some of these equities, but giving back some of the gains. You got Zoom down about 2% today to 389. DocuSign, another one that comes to mind, basically flat after accelerating higher up to about 305.82 on their numbers so far. No, excuse me, not their numbers, just trading higher over the course of potential lockdowns. You're right near the highs of 310.51 for DocuSign. Let's take a look at some of the stocks that I enjoyed. Disney. We get some Disney in my newsletter. Now, both of these, quite the week these stocks are having, right? Tuesday, things really fall out of bed from 176 to 171. You accelerate higher. You're extending those gains again today. Disney up about 1%. And you take a look at the volatility on Disney. That 170 area, I've talked about it many times in my program, folks. And this is where, doesn't necessarily mean it's going to be right, folks. Doesn't necessarily mean it's going to hold. But you like to see that area. If you're a short-term trader, if you're a long-term trader, at least it gives you areas that you can have some type of semblance of idea of where your back is against the wall, right? You're looking for an entry on Disney. Okay, you get down to that level. That's a nice level. It doesn't mean you can't just set your stop. Maybe you put your stop below this level tier. The lows of May 19th, you're talking about 167.10, right? You get below that low, you might be pushing the lows we had from January, which is 160. You might close that gap you had from December. The high of that gap's talking about 157. We had a high at 203, but again, it's a 382, folks, from the run we had from November to 203. It was almost a double bagger, right? Basically up about 70% from those lows. We'll pull back to the 382. Take a look at Uber when we come back as well. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P is pulling back a bit from the spike high we just got. We're positive by 3 points right now in the session. You're trading at 44.24. Interesting action when you look. We're pretty much right where we were prior to that jobs number. Dow up 130 points, 35,070. Tech stock slightly in the red by about by about a third of a percent, down about 50 points. And the Russell had been higher, but pulling back as well. 2237 right now on the Russell. Jumping into some of the data in that jobs number that we got at 8:30. As has been the case for the past several months, leisure and hospitality led job creation. So leisure and hospitality, 380,000 positions, of which you got over 250,000 coming at bars and restaurants. That sector, of course, taking the hardest hit during the pandemic, but has been showing consistent gains during the economic reopening. The unemployment rate for leisure and hospitality down to 9% in July from almost 11% in June. I mean, 25% a year earlier. Yeah, we know that restaurants weren't happening a year earlier. There are still about 1.8 million fewer workers than prior to the pandemic when you're talking about leisure and hospitality. Wages in the sector rose 1.2% month over month and are up 3.1% from a year earlier. Education also showing strong gains, 261,000 new hires. BLS cautioned, however, that the pandemic has distorted the sector's numbers and likely elevated the number for July. That's the part I want to get to here. You got education numbers, okay, being distorted by what's going on. That's going to distort the number we just got. That might not be a continuing trend in there. You look at private payrolls, you had about 700,000, basically in line. Professional and business services, 60,000. Transportation and warehousing added 50,000. Sectors also showing increases. Excuse me. Other services, about 40,000. Healthcare, about 40,000. Manufacturing, 27. And down the line, you go from there. But strong numbers there. We'll see if they hold out. Now, job placement site Indeed estimates there were 9.8 million job openings as of July 16th. Far more than the 8.7 million considered unemployed. We'll see how it all shakes out, folks. It's going to be an interesting day in the markets as we're basically sitting flat. But, man, interesting that you're sitting flat when we got the 10-year pulling back harshly, right? We got commodities trading lower because we got yields that are spiking, and we got the market basically shaking it off with the S&Ps making all-time highs. Folks, thanks so much for tuning in. Stay tuned. Live programming all day at TFNN. Basil Chapman's up next, folks, with the Tiger Technicians Hour. Have a great Friday.
Building wealth trading in the stock market seems